Welcome to Explain the Charts, everyone. Today, September 24th, 2025, we're taking an in-depth look at XAUUSD, or gold, which has been making headlines with its recent record-breaking performance. To truly understand where gold might be headed, we need to combine current events with a thorough technical analysis of the charts. Let's start by discussing the macroeconomic landscape and recent news that's impacting gold prices. According to FX Street, gold is currently trading around $3,770, having pulled back slightly from a record high above $3,790 set just yesterday on Tuesday. The upward momentum is battling the US dollar's resilience and a modest recovery in US Treasury bond yields, as investors eagerly await comments from Fed policymakers. FX Empire and Investor Ideas both highlight that the market is heavily pricing in further Fed rate cuts, following a 25 basis point cut earlier this month, which is a key bullish catalyst for the non-yielding yellow metal. However, Fed Chair Jerome Powell's recent attempts to temper expectations of aggressive rate cuts are helping to revive US dollar demand, potentially capping gold's gains. Geopolitical tensions, particularly from NATO warnings to Russia and the ongoing conflict in Gaza, are also consistently contributing to gold's role as a safe haven asset, providing a solid floor and limiting downside potential. Crucial U.S. economic data releases this week, including new home sales, Q2 GDP, durable goods orders on Thursday, and the PCE price index on Friday, are expected to significantly influence the U.S. dollar and, by extension, XAUUSD in the very near term. Now, let's turn our attention to the charts and see how these narratives are playing out in price action. Looking at the daily chart for XAUUSD, we can clearly see a powerful long-term bullish trend that has gained significant momentum, especially over the past few months. The volume has increased substantially since August 2025, with transaction counts jumping from thousands to over 100,000 per day, indicating strong institutional interest and conviction behind this rally. This persistent uptrend is a clear technical confirmation of the bullish scenarios outlined by analysts, driven by global policy easing expectations and persistent geopolitical uncertainty. Zooming into the 1-hour chart to examine the recent price action more closely, we can observe the strong bullish pushes. Notice how gold maintained its upward trajectory, even amidst minor pullbacks, which were quickly bought up by eager bulls. This chart covers from early September, showing how price has steadily climbed from the $3,500s into the current $3,700s, reflecting the continuous buying pressure. The daily candle closed for September 23rd at $3,763.67, aligns perfectly with the recent strong performance depicted here. Let's pinpoint the exact breakout to the all-time high by switching to the 15-minute chart and focusing on the most recent trading days, from September 22nd to September 23rd. Here we can clearly see the sharp acceleration in price. Gold started September 22nd around $3,687, and by the end of the day, it closed strong at $3,747.66. The following day, September 23rd, saw gold surge even higher, reaching an incredible all-time high of $3,790.89 before settling at $3,763.67 by the market close. This spike directly correlates with the news reports of gold hitting record highs. The $3,800 psychological level mentioned by analysts is now within striking distance, acting as the immediate overhead resistance. From a technical perspective, the break and sustained trading above the $3,700 level is highly significant, transitioning it from resistance to a strong support zone. The RSI on shorter timeframes is indicating overbought conditions, as noted by FX Empire, suggesting a potential for a short-term pullback or consolidation is present. However, given the strong fundamental catalysts and persistent safe haven demand, any dips towards $3,750 or even $3,700 might be seen as buying opportunities, reinforcing the bullish bias. Investor Ideas cautioned about a potential bull trap if the rally wasn't backed by volume, but our daily chart shows the recent surge has been accompanied by significantly increased trading volume, lending credibility to the current uptrend. For the short term, remaining bullish seems prudent as long as gold stays above the $3,750 level, with potential targets eyeing the $3,800 psychological barrier. A sustained close above $3,800 would be a major bullish signal, potentially opening the door to further uncharted territory. Conversely, if gold fails to hold the $3,750 support, a deeper correction towards $3,700 and potentially $3,650 could materialize, signaling profit-taking or a shift in market sentiment. Beyond these immediate levels, older 2025 forecast resistance levels from FX Street at $2,900, $3,000, and $3,130 have been far surpassed, indicating the current strength is much greater than anticipated earlier in the year. In recap, the immediate important price levels to watch are $3,750 as critical short-term support and $3,790.89 as the all-time high, which now acts as immediate resistance. Beyond that, the psychological $3,800 level is the next major hurdle for bulls. An unbiased prediction suggests a high likelihood, around 70%, that XAUUSD will test the $3,800 level again very soon, especially if the US dollar remains subdued and global policy easing expectations persist. However, there's also a medium likelihood, approximately 50%, of a pullback towards the $3,700 to $3,710 zone if we see hawkish comments from the Fed or stronger than expected U.S. economic data later this week. Conditions that would reinforce a move to $3,800 include continued weakness in the U.S. dollar, persistent geopolitical tensions, and dovish signals from central banks. On the flip side, strong U.S. data, a hawkish shift from the Fed, or easing international conflicts could trigger a deeper correction. Keep a close eye on those upcoming U.S. economic data releases and any new commentary from Fed officials. Thank you for joining Explain the Charts, and remember to trade wisely.